The SPAC craze has been pushed to new heights, new money flowing in from every direction, valuation off the charts, but what about the performance? Well, one quick look has shown that this has not been the best place for hard-earned savings, that's for sure. Speculation is rampant, and this is one very clear and obvious example. Will it end well? Likely not. You came here for the truth, so let me unveil that for you. Today we are going to talk about SPACs. We're going to look at what's been happening. I've shown you how much money has been flowing into them, but their performance has been down the toilet. So we're going to look at that, and I think it is very important because when you see the euphoria, there's usually a period of time when that turns around, and we could be in that period right now. We don't know what's going to happen before it does, obviously, but we can research as it's happening and stay ahead of the curve for those who would wish to protect what they have invested. So we're going to look at that. I'm going to also talk about your friend and mine, Jerome Powell. And spoiler alert, he's talking about inflation getting too hot. Can you believe it? Wow. And then we're going to look at several charts and so much more. So definitely stay tuned. Let's go. Hedge fund giant warns of SPAC blowup after betting $1 billion. So this person right here, Marshall Weiss, I don't know how to pronounce that, has built up long and short exposure to SPACs. It's now increasing short bets as potential for trouble grows. So if you read the article here, basically what it said was that initially they were buying up all of the SPACs, buying it up. And then they have turned around because the performance hasn't been good and they believe it's going to get worse. The life cycle of SPACs, or special purpose acquisition companies, is riddled with perverse incentives for investors, sponsors, and the companies using the shortcut route to come to market. And he's saying they have delivered awful returns, and most recent issuances will be no different. The SPAC phenomenon will end badly and will leave many casualties. This is coming from somebody who's got a lot of money in them. So we should be taking this in and understanding how serious this really is. Okay, this is not coming from somebody who has never touched them. This is somebody who's put a lot of money behind that. The billionaire wasn't holding back. The SPAC structure could even have been designed to encourage, quote, the bezel. And the bezel references a term coined by John Kenneth Galbraith, who, I'll just interject for a moment here, wrote a very good book. If you check out Galbraith and then do a search for The Great Crash of 1929, I think that's the title, but it's Galbraith, 1929. Fantastic book. It's a shorter book, and it was recommended to me directly by somebody in the financial system. And they said, you definitely have to read it. After reading it, I mean, I knew it was fantastic. Loved Galbraith. Anyway, describes the period in which an embezzler has stolen the money, but the victim doesn't yet realize it. So think about that for a second. What's happening today with these SPACs coming out left, right, and center? The warning follows a stampede to list SPACs. More than 300 raised in excess of $100 billion in 2021. Okay? In 2021, already $100 billion going in. Why? Because it has the word SPAC on it, because it's got Shaq. Shaq is involved, so suddenly, okay, well, that's going to bring a lot of attention. Now look, some of these, they might do very, very well. But I'm going to show you the charts in a second that make it known that so far, that hasn't been the case for the majority of them. Marshall, who has previously lost money betting on SPACs, said that the current frenzy that's also swept up retail investors presents a money-making opportunity. The fund owns or has owned almost every SPAC on the long side is now betting on their prices to collapse. We have increasing exposure on the short side as the SPACs go X deal and the low caliber of the deals, and even the potential for bezel becomes apparent. So there's more in this here if you want to know, but I'm just going to show you the charts in a second. second. The whole point I also wanted to make here was that when you're looking at the SPACs, when you're looking at investment, and especially as you move more and more towards the fringe, the riskier things, the newer things, you have to hedge your bets. That's what they're doing here. They've invested on the long side, but now they're starting to go short. It's not an all-in mentality. That's how investors over decades and decades and decades, that's how they think. Here you can see the IPO index and the SPAC index. This is peaking out in approximately February. And then you look at that over the last few months, and it has not done very well. You could see that there are some companies which have, their stocks have been performing very well. Others have sort of been trading within a range. But looking at the SPACs and the IPOs in general, this has really, really been some poor performance. But the amount of money that's going in is clearly in a boom. So somebody's getting rich. Is it you? Out of Reuters, Fed Chair Powell says won't allow, quote, substantial overshoot of inflation target. Oh, that's right, because, of course, you can trust them, right? The US economy is going to temporarily, just remember, it's only temporary, see a little higher inflation this year as the recovery strengthens and the supply constraints push up prices in some sectors. But the Fed is committed to limiting any overshoot. That's right, you don't have to worry because the Federal Reserve is going to take care of you. We do not seek inflation that substantially exceeds 2%, nor do we seek inflation above 2% for a prolonged period. These modifiers that they're referring to here, substantially exceeding 2% inflation or above that level for a prolonged period, help to more sharply define the upper bounds of the Fed's comfort zone as prices rise. Because essentially they're trying to figure out at what point does the Federal Reserve increase interest rates. That's ultimately what the market is trying to figure out, and they keep asking questions from all directions, and essentially they've been vague about it because they don't want to spook the markets. I would emphasize though that we are fully committed to both legs of our dual mandate, maximum employment and stable prices. They have done neither of the two, but I think it's very clear that they are absolutely willing to allow inflation to get as hot as necessary. Look at what's going on in the stock market today. You could see that most sectors saw outflows last week. And you would think, the market, while it's had some down days overall, the market has performed very well. And this just breaks it down, different sectors. And also you could see, the last week versus the 4-week average. And while we've had some volatility in the markets, the money here is just showing you in total, it had actually a bunch of that cash flowing out of the markets. Here you can see the 4-week average flows turn negative for the first time in 8 weeks. So the net buys is the blue lines there, dark blue lines, and the S&P 500, you can see the lighter line. So while we've had the market moving up, you can see the net buys actually declining. Very unusual. But I guess when you have buybacks accelerating and now at record levels, you kind of have an explanation for that, don't you? And that takes me to the Money GPS insight. When you look at what has been happening over this period, you have to actually look at the data and not make assumptions. The average retail investor is basically going in blind. But if the market continues to move up in a straight line, they don't have to be intelligent, they don't have to diversify, and they can simply go with the flow. However, if you look at the data as it's coming through and you start to realize to yourself that maybe there is more risk and fragility, and that all along, this has been supported by the stock buybacks. Why have the stock buybacks been the #1 purchaser of stock since 2009? Because the debt has been so cheap. So they borrow really cheap money. They use it to buy back their own shares. insiders in the company are profiting on the way up, because for example, the stock hits $100 a share, they're able to cash out. The stock hits $120 a share, they're able to cash some out. So all along the way, as it continues to increase, because their compensation are given certain aspects of this, the stock hitting certain levels, they can move money out. So this is enriching the people at the top, and they are able to pull their money out, use it for whatever they need to, and the average person just sees the stocks rising, so they put their money in, but they don't understand the dynamics of how the market works. You could see all of that information. I have a video on my free e-course that you can check out for yourself, all right? So that actually will tell you where the insiders are buying and selling. You know, you definitely got to check it out. Let's move on. Dogecoin actually became worth more than Ford and Kraft in market value, if you could believe it or not. You could see how the money today, where it's flowing, is so different than where this was previously. And if you can compare it to what we saw towards the end of the 90s. And the 90s had some superior growth, very high growth during this period. But how did that end? Well, of course, with a lot of speculation. Yesterday's video, I covered what was going on with Palladium, and I just wanted to note this. It surges toward a record with demand rising amid shortages. So I didn't give you the exact reason why, but take a look here. Rebound in automaker demand is supporting prices of the metal, and they go on to talk about some other factors here, but essentially this is something that people should be aware of, how it works, how a lot of these precious metals even are also used as industrial metals, so it has sort of a dual purpose. This is one thing that I do believe will be taking effect at some point. Global tax gains momentum with Dutch ministers seeing summer deal. So they're all going to go for this. You've got all the big countries, all the big names that are going to go ahead and agree with a global minimum tax. It doesn't mean that there's going to be some global institution that's accepting the money, but it essentially brings all of the governments together to agree upon policies. So they're unifying policies globally. And of course, this is all part of the greater construct. The housing boom is going on everywhere, and this is one more example. Houses in Greater Boston cost more than ever last month, $725,000 as the median price. But look around, you know, there's places that you can see. If you go to the major cities, you drive out an hour, 2 hours in different directions, and the prices are 50% higher than where they were a year ago, 2 years ago. This is unbelievable. But clearly, if you bring interest rates to rock bottom, wacky things can happen. Wanted to finish off with this one here. Apparently, they want marijuana to be decriminalized by next year at this time. So I think that this could be bullish for the industry in general. That's important, of course, because there's a lot of money to be made in this industry. And we have seen a lot of speculation initially when it was coming through a few years back. But certainly there's so much more that will be done related to this as it expands into new territories. Not only is decriminalized, but also legalized. So this is something that people should be paying attention to closely if they want to invest. That's all for this video. If you found it informative, hit that thumbs up button. You're supporting me when you do. If you want to learn how to sell stuff online, you can do so for free, the AmazonGPS.com. If you still read, I know not many people do today, but I've got 2 books for you that are fantastic. They'll break down everything you need. And guess what? I wrote them, so I am heavily biased. So you can check them out at the link in the description. Have you seen this video yet? No? Well, you definitely want to check it out. Click it, and I'll see you there.